Hello, I'm Greg Bell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis, investment insights that'll boost your trading potential. Coming up, U.S. markets are in focus, investors weighing data, rates, and mega cap leadership, with momentum being put to the test. Then our trading debaters, they're here to square off on Arista Networks, debating whether AI-driven data center demand and cloud spending can keep fueling growth, or if valuation and competition are starting to matter more. We're also going to show you actionable option strategies to play both sides. Plus, a look ahead to key Canadian earnings later this week. We got Shopify and Agnico Eagle on deck. That's all ahead. Don't forget to like and subscribe. You're watching TD Active Trader Live. The pre-market, I feel like the markets were struggling to find some direction. They found some direction. It's to the upside. The Dow actually hitting fresh highs. The S&P 500 showing a bit of strength too out of the gate. We are awaiting that delayed U.S. jobs report. It was supposed to land last Friday. That little government shutdown means it's going to land tomorrow. Inflation then gets pushed out to later this week. But we did get U.S. retail sales this morning for the month of December. Big spending month, right? They came in flat. Big disappointment. The expectation was for a 0.5% bump. So the market's weighing that as well, and earnings continue to roll in. Let's take a look at the heat map, see what is working and see what is not working today. Across the board, this is a pretty mixed one. There's not a lot of movement in tech today. Noticing, though, Google, of course, Alphabet, the parent company name, they're out now. We know they have big spending plans for the hyperscalers. Well, it's starting to give some information about the size of the bond sale, so I don't know if that's weighing on the name. Let's bring up Arista Networks. That is the stock of the hour, the bear bull debate. We'll show you some option strategies. Why did we pick it? It develops software and hardware for AI infrastructure, reporting earnings on Thursday. Pretty strong run, you can see right there when we started getting real excited about AI, and that lifted a lot of boats, including Arista. So where does it go from here? Let's head over to the desk for the bear and bull debate and some potential option strategies. And welcome Hiran Amin and Jason Natick from our direct investing educational team. Gentlemen, we are back for another week. Let's do it.
Let's do it, Greg. Great to be back.
Right into it.
Before we do it, though, just got to remind our audience and our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Back to the stock of the hour, Arista Networks. We got our time on the clock. You each get your 2.5 minutes to make your case. Then we give you some time to counter. Okay, I don't even know who's the bear bull, so I'm going to find out right now. The drum roll is, we drew from the hat. Hiran got the bull case. Why don't you kick things off for us?
Yeah, I've got the bull case, Greg, of course. So let's talk about Arista Networks. And my overall thesis representing the bullish side, of course, is that it blends high growth, industry-leading margins, and a solid competitive moat that's built around, as you mentioned, software-driven networking specifically. So here's what I'm here to argue, that it actually makes AI work once the lights come on. So let's talk about first the aspect of the demand that's in there, the pipe layer of the AI revolution. I'm an F1 fan, so I'm going to call it the drivetrain of a Formula One car. So Arista builds high-speed, ultra-low latency network drivetrain between GPUs and servers. Basically, the connection point. Crucial for training and inference workloads. We're kind of in the inference phase right now. Anytime you put in ChatGPT request, that's an inference happening. That data's got to come back to you, and that's Arista Networks that connecting you to the AI data centers there. They have the highest market share of any company in data center switching and share of ports. Now, they took this mantle from Cisco. Cisco had 80% of the market dollars switching in 2012. And Arista took over that crown in 2024. The other aspect that I want to mention about the demand side of it is when you look at what we call TAM, total addressable market, Arista says for 2028 they expect $70 billion. In 2029 they're projected $105 billion. That implies an annual compounded growth rate of 22.2% between 25 and 29 over a 5-year period. And it's already meeting about 8% of its 2029 TAM. So that is really showing a significant runway for growth. And then we'll just talk about the moat aspect of it, their software and moat. So they, when you build into Arista's network essentially, and once you have hyperscalers that are built into it, it's hard for them to switch out. Like it's almost like trying to rewire an entire city. If you've ever seen a data center with all those wires, so it's painful, expensive, and risky. So you've got stickiness there, but also their software-driven architecture is based on open programmability. So means that hyperscalers or customers are not shackled to just their hardware. If they want to build their own software, they can. It gives them the flexibility. Let's go into the charts though, and let's see that story play out on the charts as well. And what I wanted to do is I've got a daily chart. It's the one I want to look at more of a longer view. Is you can see we're in a clear bullish uptrend. Now you're going to find points where the stock has reached the upper limits every time it's gone up there. It has come down, but more recently we are on the lower limits, and every time it's tagged this lower limit, especially this line that I wanted to mark, the support at 125, we've seen it touch it, bounce off of it, and come back and go back into the momentum in an upward channel there.
Hiren's feeling pretty confident, I think. What do you got for us, Jay, on the bear side?
What a nice case there, Hiren. But there are headwinds. Some of those, just to lay out a few here, we're building inventories. They're not there. Large insider selling. That's very prevalent with Arista. Concentration risk for Arista is leaving them on really what we call the razor's edge, and they're one bad quarter away from their stock taking a tumble, and we're not that far removed from seeing it happen in early 2025. Here's 3 quick risks that I want to take a look at that can really add to the kind of pricing volatility and kind of maybe question the sky-high valuations that we're seeing on the stock. One is, as I mentioned, it's that customer concentration risk. The Arista's really relying on, well, 2 main, the big deep-pocketed customers, mind you, but 2 of them, Microsoft and Meta, make up 35% of their client base. They're paying revenues to them. So if we get any sort of, not even talking about a pullback or a freeze, if we get any sort of slowdown in spending, that can mean that the revenues are going to drop quickly. And that's not even talking about those big deep-pocketed customers building in-house opportunities to kind of freeze ANAT out. Next is more from a competition perspective. AI networking opportunities attracting intense competition. NVIDIA is stepping in. NVIDIA in particular is bundling networking with GPUs, creating more kind of integrated solutions that can put pressure. And this is something that's going to potentially compress market share, compress margins, and even remove pricing power from Arista. So this is something that is going to, once again, question those premium valuations. All right, let's just move on here. I do want to get to the charts, but the bottom line here, this isn't a necessary case about execution from a bottom line here, but Arista may be a strong company, but they're priced to perfection. They've got the concentrated risk, cyclical potential AI spending, and rising competition, all really put questions and poke holes in the argument. But jumping ourselves right into the chart here, yeah, it's certainly not questionable here. They were on an up run, but we did see a big gap up in Q2 earnings that can be viewed as a positive sign. But what I'm taking from this is after we get that, we do see lots of consolidation moving forward. Outside, we did get that run up like Hiren was talking about, but we've now since crossed below the 135 kind of inflection point and been using that as now an upper boundary from a pricing perspective. We then start to look at kind of more near-term trading that's been going on here. There's been some additional bearish signals that are playing out on the screen here. Coming into October and November, we see a double top forming, kind of a classic bearish reversal pattern. We saw that play out, and those projected moves that we saw on that was actually brought us down towards the bottom end of that gap. So.
Okay, nice. I'm 2 cases later now, both very strong arguments. Take me into a little counter.
Yeah, let's talk about the concentration risk that Jay brought up. First of all, hyperscalers, right? When you think about concentration risk, yes, but it's there. You've got 2 of your biggest customers driving 35% of your revenue, but that's what I want to focus on. These are the biggest cloud and AI operators on the planet. As a business, I want the guys who have the biggest dollars going to spend with me. I don't care about the little plebs. So when you talk about that, if you big customers, they're the biggest spenders in AI history. So yes, give me some of that. And you know what's another tailwind? They just announced fresh CapEx goals for 2026 and going beyond. And if you look at Meta and Microsoft, the combined is $285 billion. So even if we talk about a slowdown, they've just doubled their expenditure. Even if if Arista gets a piece of that pie, that's a big piece of that pie that's going to drive their bottom line.
We don't hear about it, and all this big CapEx spend and the revenues are going to be flowing around. Is a lot of this revenue is actually deferred, and that's increasing at alarming rates. And the deferred revenue rates are actually increasing larger than kind of standard revenue rates. We're talking in September 2025, we saw an 87% increase, up to 4.6 from 2.5 billion. So this is money that Arista is not receiving until delivery, and they're they're actually working on schedules of the AI companies, not on their own. So they don't know when and how much of that money they're going to receive. And then if we're talking about revenue, what's the other side of the coin? It's talking about expenses, right? Arista's expenses are growing at a rapid rate. Total operating expenses for Q3 2025, $512 million, up 36% over the same quarter of previous years. So we're seeing quarter over quarter growing expenses and concerns about that revenue inflows and not being deferred later till later times.
You know, and here's what I'll address that with. So even when you think about expenses, natural to rise. As you're scaling up, you're going to have more expenses coming in. But the key is when you look at the gross margins and then the net margins, if there's no real compression there, then expenses are just part of normal business. When you look at the other standpoints, when you talk about the fundamentals, return on invested capital, we're talking about 53%. Return on the ROE sits at 33.6%. Now, when you look at their weighted average cost of capital, this is what a business measures its overall profitability against, which sits at 12.75%. They're well above those benchmarks. Coming back to gross margin, 64.3%. Yes, a little bit of a compression. We're sitting in high 60s, which is far superior than any of the competitors they have, including Cisco and Juniper networks in this space there. So if it's not affecting them as much as it might be the competition there.
I want to leave us with kind of one point here is if we're talking about selling, sure, there's lots of selling going on, but when it's coming from the insiders, yes, some insider selling is going to be a normal part of the equation, but the ratios on Arista's side, $1.1 billion in net sales in terms of zero buying from the executive level, so people are voting with their dollars, getting cash out of the business. A big sell was actually importantly done by their CTO, Ken Duda, over $7 million worth of stock in early 2026, right before the stock started to come off. And if we can expect the same thing in this start of the year, maybe we'll see more selling.
Speaking of Kevin Duda, I just want to say this is also a founder-led company that you want to invest in. Andy Bostonheim was the original founder of Sun Microsystems and now founded Arista Networks.
There you go. Aaron was waiting for that, right? You signaled you were going to run down the clock. He's like, lastly, I'm going to say, and he was like, no, you're not running down the clock on me, buddy.
You can get
I'm getting something off the camera.
I'm getting something in there. All right, nice little debate there. Let's jump into the charts and start talking about possible option strategy. Why don't we start from the bull side?
Yeah, let's look at that, Greg. So again, I'm going to bring up the charts here and just mention, like, when you look at the overall trend and how I want to position myself. So it's still respecting that overall bullish trend. We did see it bounce off of this 125 level, so that's one key thing I wanted to take a note of. But we do also see this upper resistance hang at the 160 level. So coming into this earnings period, one way you could look at taking advantage if you're looking to maybe collect some income versus just look at a speculative directional trade is to do a strategy known as a jade lizard trade. So here's what here's how that trade sets up as. So a jade lizard essentially is comprised of three different components. Let's drag it down over here. And what we have is, first of all, the upper side of this trade is we're looking to do a credit call spread trade. So in this case, again, I mapped out the level at which we've seen previous areas of rejection or resistance, liquidity in being injected. So selling the 165 call and buying the 170. So that's going to cap me. It's creating a 5-point width spread on this. So I'm collecting some premium there. But on the downside, maybe I also want to see that 125 level, which has been a previous support where we've seen demand come in, but it could also be seen as an attractive price where someone may want to acquire the stock at. So sell the 125 put as a single sort of uncovered put on that side. So we're collecting the credit. So overall, what the idea between this trade is that you want to try and collect, ideally in a theoretical situation, as much credit that almost presents no upside risk. And the reason we want to do that is because you can see my total risk on the upside is a $5 width spread, so minus my credit. So I want to try and collect at close to 5, or if not more than 5. In this case, we got close to, we got $4.90. So there is a little bit of upside risk, and maybe we can segue into talking about that. Is what's going to happen ideally with the trade. So we want the trade to stay between the 125 to 165. Expect and move with options going into this earnings is $16. So ideally we want it to stop at 165 and 125. But if it goes higher than that on the upside and goes beyond 170, what we stand to lose is the value of the spread, which would be $5 in that case, minus the total credit we collected, which is $4.90. So in other words, we're only going to lose 10 cents or $10 on the upside. Downside is where the bigger risk is, though, because on the downside what we have is we could have the stock fall below 125, which means our break even is going to be at 120 and 10 cents, and so if it falls below that, we start losing money on it. But in theory, we could say the stock could go to zero. And that's why you can see in the max loss situation, I have put it as $12,010 if it does happen to go to zero. But that's the downside risk. And then there's one that you like calling out as well whenever you sell a put, Greg.
Simon risk.
Assignment risk, you got it. We have to pick up this stock. That means we're going to be put the stock. Net cost is going to be 120.10, so 12,010. That's how that number comes in. But we're going to have to hold that stock if it does happen on the downside there.
Like you've pointed out before, sometimes when people look at assignment risk, they say, well, I'm comfortable buying the stock
Exactly.
at that level, right?
Yeah. So this is part and parcel of this trade. Is like you've already factored that into the scenario where you're okay to buy that stock at that price and hopefully see some meaningful upside from there.
All right, interesting possible strategy there. What about the bear side, Jay?
All right, the bear side is going to take a much simpler approach to his trades today. So we're actually going to be.
It's winter. The bear's still sleepy. He's
Absolutely.
groggy. He's groggy.
Like I said, we're going to go with a kind of a more, I don't want to say rudimentary trade, but something that everyone should recognize. We're going to be looking to capitalize on the downside of an expected move with buying a long put. This is a trade that it is directionally in kind of focused, that you do need the stock to move down for you to make any profit, but you have a very limited risk that you're putting onto the trade, which we'll uncover as we unpack it in the chart. But you can see here on the chart, we can see where Arista has been trading in this relatively tight band. If we do get a replicated move of what we had, I talked about a little bit during the debate, a move down off in early 2012 of 48%. If we can get a really outsized move in the next 2 earnings periods, we've got an opportunity to bring in some significant gains. And I've got this on here. So we're buying the 110 puts. Right now that's going to cost us $4.20. The downside in terms of market maker move, where I've established that by pricing the at-the-money straddle for the expiration date, that's below our strike price. So we need if it moves down the way the market is giving it range for, we've got an opportunity to profit there. I've chosen 2 expiration dates out into the future, or 2 earnings dates out into the future, out until May, because not only is it giving us access to time, right? That's going to mean our options are going to depreciate slower, but it also means that we're getting 2 potential volatile events to cause downward pressure onto the market, and this is an opportunity for us to profit if we do get that directional move in a bearish fashion. All right, so in terms of profit and loss, what we stand to make, if the most you're ever going to make on a put, if you're long with a put, is if the stock moves to zero. That's very, very much not likely, but if it does move down to those levels that we saw depreciate, down to in those low $70 ranges, we're over $32 a share is what we're making on this. So big moves need to happen for us to make those big profits, but this is what we're expecting with a very low risk in this particular case. Any long option, we're limited to risk in terms of what we pay for this trade. In this case, as I said, $4.20 per contract, or $420. If this doesn't go our way and we choose not to elect to buy it back to close, that's what an investor would lose in this particular sample trade.
All right, great stuff. Very interesting possible trades there for our viewers. Thanks for laying out the bull and bear cases as well for Arista Networks. Just a reminder to our viewers, though, that this debate was for educational purposes, does not reflect our personal opinions about the stock. Before we move on, Jay, you're going to elaborate on the trade ladder.
Yeah, the trade ladder, it's a pretty unique feature. Then here and I were actually doing a little chatting about it yesterday, and we thought it'd be nice to show the audience about this as well. This is a really kind of a visual tool that folks that are actively trading, typically stocks and ETFs is what's most commonly used in this tool, but it's a really an interesting way because it lays out prices stacked vertically. You're getting a bit of a mix of price at specific volume rather at specific price levels and level 2 kind of all baked together into one really easy interactive trading session. So let's jump in. Enough of me talking. Let's actually show right on the platform. So you can find this tool where I'm on the trading tab. These tools are all system default on the trading tab. You're usually seeing us on the options sub tab here. If we look just slightly off to the right, the trade ladder is going to appear there. So what we're seeing here is if we scroll down here, as you can see the prices are listed running down the middle, and then the volume are listed on the left-hand side with the different bids highlighted at each particular price level. If we scroll up, the asking prices should show up for that as well. And what's really neat about this, it's really about speed of getting your order into the market. You have the opportunity either to buy at the market or sell at the market, depending on your preference and depending on the positions you're holding as of right now. But you can also do a trade with regards to just tapping on the individual price levels, and that's going to then begin an order. So we're getting limit orders in at the market, but just by simple clicks of the mouse. I'm just going to quickly do a buy market order so everybody can kind of see see how that operation is going to work, because there's a really neat function that pops up after you're in a position. Okay, so now I've just gone long with some Arista with just 100 shares in my demo account. What's really cool about this, if you look at these green and red areas on the left-hand side, it's showing you in real time what your P&L is on that position if those prices move to those different levels. So we're able to be kept informed all at a moment. We've got tools to flatten, to create duplicate positions. It's all meant to be a really self-contained visual trading environment, so you can get the information you need to help keep you informed about your trades.
All right, very cool. Another part of the platform we learned a little bit more about. Thanks for that, Jay. If you at home have a question about the TD Active Trader platform, or if there's a stock you want to see our debaters go head-to-head on, just send us an email at td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website, where you can try out the platform risk-free by opening a practice account. You click on that Try TD Active Trader button. Then when you're ready to switch to a live account, simply export your workspace, start trading for real. Before we wrap up the program, I want to hear what's on the radar for the rest of the trading week. What is coming up? What looks interesting? Hearing.
Yeah, let's start with the macro front, Greg. It's going to be a busy data week. We had retail sales obviously today. As you alluded, tomorrow is going to be the big blockbuster one. That's NFP, non-farm payrolls, or commonly called the jobs report.
Jobs.
Yeah, jobs. So the big thing will be, expectation by economists surveyed by FactSet said 70,000 is the expectation for January, which will be slightly up from the December numbers, which are sitting at 15,000. Unemployment rate is going to be the key one to look at. Expectations remain steady at 4.4%. But interestingly, Kevin Hassett, who's the director of the National Economic Council, was on doing the media rounds this week, and I think just yesterday he mentioned of a possible weaker jobs number as well. But also what's going to be different is this going to be revision of the 2025 jobs number starting from April till December that they're going to look at. So
We've had some big revisions in previous
this is going to be a big one.
Big
The Fed
revisions.
anticipates almost a 60,000 loss on a per month basis is how far they're going it at. Some economists are projecting 20 to 30,000. So we'll see really how that picture is being painted. And then, of course, Friday is going to be the CPI. This is where the Fed's kind of more looking on the inflation picture now, given that the labor market's kind of a little bit on even footing, I would say.
Two mandates in 1 week.
Yeah.
Jobs mandate and inflation
They're
mandate.
going to get the double whammy. So CPI is going to stay, inflation is expected to rise 0.3% on adjusted for seasonality and 2.5% on a sequential basis. So really, any surprises, and January we do see is historically a higher month, just because you don't have those discounts gone from December period and new buyers coming into the market. So it is adjusted, but they do expect it some seasonality to creep in where we'd see a higher inflation print coming in. So that'll be something to keep an eye on.
Data. Yeah, sort of guy. We got Canadian names.
We do.
We're going to give a Canadian flavor today. Yeah, we're going to give an ode to gold. We always talk about the commodity, but who's making the commodity? We're going to talk about a producer, Agnico Eagle Mines, of course. Canadian senior gold producer, the largest Canadian gold producer, and the second largest gold mining company in the world. They have their earnings coming up Thursday close after the close. This is really a print for, bellwether for senior gold producers. There'll be an indication of that. And what's going to be different is they've benefited from operating mines in stable countries. What we see in the story, we debated Barrick in quite a few shows back, but the story with Barrick was they operate in sort of these volatile markets.
Political risk,
and
right?
Political risk, and you got contracts being torn up and costs rising, whereas Agnico doesn't face quite the same issues there. So in this earnings, they are expecting EPS of 253. That is going to mark 100% year-over-year growth, 3.24 billion, which is a 45.7% year-over-year revenue growth that they're going to mark. The big question that investors want to hear is the guidance for 2025's production cost. They're still on line to pace at 3 to 3.5 million ounces of gold, with a total cost being around that 915 to 965, and the AISC of about 1,300. Management did say as gold prices do go up, their benchmark cost is 2,500. So as gold prices go up, they do start seeing more higher prices linked to royalties creep in. So that's one to keep an eye on. Looking at the charts, let's look at what the chart story is playing out with. So we've seen a solid performance similar to what gold story has been in this strong upper trend. We started seeing the trend now kind of breaking. When I say break, it's just we've seen bigger range of candles coming in, which is telling us the volatility, which is telling us a little bit about the volatility picture, especially in the start of 2026, we've seen larger bullish candles coming, definitely larger bearish candles, especially with the shakeout that we had like a couple of weeks ago. This did form a telltale sign over here. I've marked it in this sort of channel where we had a gap up and a gap down event. And this is a classic formation of what's known as a bearish island reversal, where you had two gap forming and it reversed back up. But coming into this earnings print, it's squarely back above the 21-day moving average, very much respecting that. And going to this earnings print, we could look at possibly touching resistance at 215 to 225. Expected move is going to be roughly about $12 based on the options pricing. Downside risk is going to be sitting squarely back on its bum at the 50-day moving average, which sits at about 190 there.
Squarely back on its bum. That's good. Is that a technical term?
That's a technical term. We're gonna go with it.
And you have, there's not a lot of ways to play the tech
Right, from the Canadian
story
perspective.
in a Canadian perspective, but you got one of the big ones. But with Shopify, my question is, AI helper or Hector these days?
Yeah, it's in the chart is when we get to it, is certainly telling a story how it's been kind of eating its lunch, as we'll say. But I do like to sprinkle in some Canadian flavor. I wish it was under a bit of brighter circumstances. Shop is off roughly 37% since October, so showing some weakness in its price. They know that in terms of, it's not all Shop. We're talking there's been broad market sell-off in the service or in software as a service. Analysts in the research that I was doing is calling it a derating of the sector. Some of it is due to high valuations that we're seeing across the sector. And Shop is no stranger with that, with PEs north of 82. That's well above the industry average of just shy of 43. But there's also fears, as I said, that AI is coming in and going to be affecting traditional business markets in unseen ways here. And we can add to kind of that geopolitical tensions that we've got sparked in January. There's concerns around the supply chains between U.S. and the EU. That's certainly playing here. And there's also the concerns around the market kind of rotating into more defensive assets, and that's exacerbating kind of the pricing that we're seeing here from a Shop perspective. So if you're a Shop believer, you're now, the earnings is time for them to kind of seize the narrative and maybe tell their own story, but they've got to tell the story that analysts are wanting to hear, and analysts have, big expectations coming in. We've got, just to hold the status quo, like 3.58 billion revenue of 50 cents, earnings per share of 50 cents. Those are 27 and 13% increases respectively. And things to listen for outside of just those top line numbers are, what are they projecting from an e-commerce growth kind of market wide? How are they integrating AI tools into their own products? And what are their partnership deals like with OpenAI and other things they've had previously announced? And then one thing the analysts are also looking for, lastly, before we get to the chart, they're looking for durable profit growth, but as this might be probably, you could say, across all factors, disciplined spending. That's something coming in here. All right, onto the charts here. It's been a tale of different time frames. Like the stock was heading up over here earlier in the summertime. We saw a big gap up in the summer, August 2025. The stock kind of was continuing on that trend. Kind of found resistance around the top, around 170, but kind of there's been some telltale bearish signs. We have a rounded top forming here. There's actually that rounded top actually was followed directly by another gap down, which to really confirm that pattern has been completed, and the measured move down has brought us squarely right into the upper ends of that the gap that we were holding for quite some time, but the market didn't hold in. We had essentially three black crows have brought us in here, but the gaps have continued to come down. One nice thing to look at here, as we found some stability from a pricing perspective heading into earnings. Support around 110, which we haven't seen those lows since kind of much earlier in 2025, but that's there. We did see the MFI bounce off the oversold market at 20. So there's some stability in the market pricing, and the market is catching its breath. But once again, lots of big news coming out from earnings tomorrow morning. So this will be appointment television.
All right, lots of stuff on the horizon. There are always lots of stuff on the horizon. Very nice job of breaking it down, guys. That is the show for this week. Now, we don't have a show this coming Thursday, but we'll get back to our regular programming next week. As always, investors should perform their own due diligence before engaging in trading. Thanks for watching.